Now we are going to see the starring. A very important chapter. The important question is not an insurance in India behind nearly 1,800 thereafter. Getting first life insurance company is Oriental Insurance Company. The first non-life insurance company established is Tricon Insurance. Very important question. The first Indian insurance company was formed by 1870 in Mumbai. We can copy that question by the notes. In these notes, we are making the questions. The first insurance company in India is formed in Mumbai. The answer is where they are created company and which year we have to take it note. And we have to sell here and go to that one. Then important. In 1912, the Vehicle Insurance Company Act and Provident Act were passed to regulate the insurance business. Life Insurance Companies Act 1912 made compulsory premium rate tables and created variation of companies certified actually. However, the discrepancy between the Indian and foreign companies. The Insurance Act 1938 was the first legislation enacted to regulate the company. Yes. After study this material, they are asking one question: which among the following offset tax point? The maximum tax limit, reduce the tax burden, and result of prudent and investment. We can study 25 pages each day. Easily, we can write the exam for your IC 38 exams. Chapter 1. The Life Insurance Company Act. The Life Insurance Company Act is and the Provident Fund were passed to regulate the insurance. How many insurance business get started? How can they know the business started by the answer is Life Insurance Act and Provident Fund Act. The Insurance Act 1938 was first legislation enacted to regulate the conduct of insurance company in India. They can ask the first regulation enacted to regulate the conduct of insurance company in India. They can ask the questions. The first insurance company, the first regulations enacted company in India. The first regulation enacted to regulate the conduct of insurance companies. What's the year is answer? What was the answer is 1938. Again, ask the questions. And then nationalization of life insurance. The life insurance business was nationalized in 1st September 1956 and the life insurance of corporation India. The life insurance business was nationalized. They can ask when the life insurance business was nationalized. When the life insurance company was nationalized. Typically, the life insurance was nationalized. Yes, this is also the question. Question means we can put it the question box. We can put it and answer is 1956. This answer when the life insurance was business was nationalized. This was the questions. We can make it red color. Answer is 1956. Make it red color. And done. We are studying the IC the data exam continually. Daily you can spend at least half an hour to 1 hour. We can easily achieve that 50 out of 18 marks or 50 out of 50 we can take it. The nationalized non-type of insurance the end of matter. The general insurance business nationalization. The non-life insurance business was also nationalized and the general insurance of Corporation of India. This is a very important question. Malhotra Committee and IRDA. We must know about the IRDA. What is the meaning of IRDA? The question they will ask simply what is the meaning of IRDA? They can ask what is the meaning of IRDA? What is the meaning of IRDA? They will ask the questions. Easily they will ask. The question color we can make it proper. The answer we can make it red color. There is a question in keyboard here. Yes, sir. What is the meaning of IRDA? Indian Regulatory and Development Authority of India. Insurance Regulatory. Sorry, I read wrongly. What is the answer is Insurance Regulatory and Development Authority of India. That's the question. What's the meaning of IRDA means? The Insurance Regulatory and Development of Authority of India. Yes, definitely they will ask this question. In 1983, the Malhotra Committee was set up to explore and recommend changes for development of the industry, including the reintroduction of element of competitions. Yes, which committee was set up and explore the recommend changes the development industry, including reintroductions of element of competitions. They can ask the which committee set up, explore and recommend changes in development of in this insurance industry. Yes, they will ask the which committee. This is a sample question only. Maybe question will be changed, but answer which committee? Which committee? Which committee was? They will ask the questions and will recommend changes of the industry of insurance. Yes, definitely they will ask. We can answer a Malhotra committee. Malhotra committee. Yes, we can easily memorize this word. Memorize this word. Why? This was easily keep in mind. Malhotra committee. Yes, I remember the same question before. What is the meaning of IRDA? You can say with me. Insurance Regulatory and Development Authority of India. Thank you. We can see the another readings. And that the Malhotra committee was set up and to explore, recommend changes for the development of industry, including reintroductions and element of accommodation. The committee submitted its report in 1994. The 1997 Insurance Regulatory of India, passing the Insurance Regulatory Development Act in 1998. That the formation of Insurance Regulatory Development of India, April 2000, statutory regulatory body both of life, non-life and health insurance industry. IRDA has been subsequently renamed IRDA in 2014. Definitely, they will ask the question. The Insurance Regulatory Development Authority of India in April 2000 as the statutory regulatory body both the life and insurance. Life and non-life and health insurance industry when it was saturated by the IRDA. Yes. Which year they were changed the IRDA to IRDAI? 36th question. Which year, which year they changed to IRDA to IRDAI? Yes, definitely they will ask the question. Answer is 2014. I already said answer. IRDA means the Insurance Regulatory and Development Authority of India. Yes, very good. Next, we will go to the study again. Amending the Insurance Act in 2015, certain stipulates have been added governing and definition and formation of insurance company in India. The Indian insurance company includes a company in which the aggregate the holding of equities serves foreign investors, including portfolio investors, do not exceed 49% of paid-up equity capital. As such, an Indian insurance company which is in Indian world and control, in such a manner as may prescribe. Again, ask the questions. Including portfolio investors do not exceed 49% as of paid-up equity capital. How much do not exceed the equity capital? Second, ask the question. What is the answer? 49%. 49% is the answer. How much equity capital? The portfolio investors, how much equity capital? They cannot or they do not exceed the 49. How much do not exceed the capital? They can ask the question. How much they cannot exceed it? How much cannot exceed the total? How much cannot exceed They cannot exceed or they do not exceed. Correct question is they do not exceed total capital value. So some question we can understand, some questions you have to mark up it. Is correct? Correct? Yes. Exactly the questions they will ask, but we will try the notes. We will take the notes. How much? 49 percentage, correct? So say with me, 49 percentage. Yes, correct. Yeah. Oh, correct. Yeah, remember the answer is correct. Yeah. Yes. Thank you. The life insurance industry today. Currently, there are 24 life insurance company operating in India. Data is currently. This 24 means actually it will maybe vary. Uh, okay, Aveva, very famous, Bajaj, and DHFL, HDFC Bank, very well. ICICI Prudent Bank, PNB, okay, NEP, Reliance, SBI, Data, there's a, okay, you know very well, yeah? Okay, you can ask the question. Which among the following is the regulator for the insurance in India? Yes, you can answer. Which among the following regulator of insurance in India? This was the question. 35th question. No, sorry. at the ninth questions. Correct. What is the answer? You can answer it. You know very well the same question also. It means about the Insurance Regulatory Authority of India. Yes. Next, how insurance works. In modern commerce was founded the principle of ownership of property. When the asset loses value by loss of destruction due to certain event, the owner of the asset suffers economic loss. How it was common fund is creditor, which is made up small contribution from the many such owners of similar assets. The sum could be used to compensate the loss suffered. Yes, definitely they will ask one question. This IC 38 exam, you can easily get a marks. First, the first question: what is the meaning of insurance? What is the meaning of insurance? The risk transferred through the pooling is called the insurance. The second question: the measures of reduced chances accrues the risk known as the loss prevention. By transferring the risk to insurer, it becomes possible to enjoy the peace business more effectively. The origin of modern insurance business can be retraced by lawyers. In insurance contracts, risk retention indicates a situation where it decides to bear the risk it affects. Which of the following statement is true? Insurance protects the asset, or insurance prevents the loss. Insurance reduces the possibility of loss. No. See, insurance protect the asset. No. They cannot protect the asset. Insurance prevent the loss. They cannot prevent the loss before. Insurance reduce the loss possibility. No. Mostly, most of the insurance nearly true like that, but the real answer is insurance pays when there is a loss of asset. This is the real answer. Out of 400 houses, each value 20,000. Average 4 houses get burned every year, resulting the combined losses 80,000. What should be annual contribution each house wants? C. 80,000 divided by 400, answer is 200. Which of the following statement is true? Insurance's method of sharing losses of few by many. Already I said is the pooling of reserve. The first question is risk transfers through the risk pooling. Yes, this is the pooling called insurance. And why do insurance arrange a survey inspection of the property before accepting the risk? Why do insurance arrange for survey inspection property before acceptance of risk? To assess the risk of rating purpose. This is the answer. Why? To find out how insured purchase the property. They cannot decide right now. To find out whether other insurers have also inspected the property. They are not come to inspect it. They are coming to survey the rating purpose. Okay, what is the question? We must read at least 2 times. Why do insurers arrange the survey and inspection the property before acceptance of a risk? They will come and they will rate the state. What is the property? They will analyze where the property, what is the rate of property, the property when they are constructed, how many years they can use it. This is the survey. We must know about the to assess the risk for reading purposes. This IC38 exam, IC38 exam, we can take the notes and attend the exam very easily. Okay. Which of the four below options best describes the process of insurance? See, Before I said, insurance is the method of sharing losses of few by many. We can recover the few numbers by the many. So see, sharing the losses by few by many. The first life insurance company already is in the chapter. When we read the chapter, we are taking the notes. First insurance company answer is the first insurance company answer is Oriental Life Insurance Company. The Arab Life Insurance Company Act, the Provident Fund Act were passed to regulate the insurance business. Answer is 19. The Insurance Act was first legislation enacted and regulate the conduct of insurance companies in India. Yes, which year? You can get answer. 1930. I think that it was called by the IC38. This is my opinion. Okay. Because the life insurance business was nationalized. Yes, the answer is already. I read in that chapter. IRDA means the answers already I said. Indian Regulatory and Development Authority of India. What is IRDA means? We can say with me Insurance Regulatory and Development of India. Which among the following is the regulator of the Insurance Authority of India? Same also. Insurance Regulatory Development Authority of India. Which among the following is secondary burden of risk? What is the secondary burden of risk? The secondary burden set aside the reserve the provision of meeting by losses. Which among the following method risk transfer? Bank, insurance, equity sales, real estate. Which one? Insurance. We are studying about insurance. That's why we are telling you insurance. No. Risk transferred by the insurance. Okay. Equity shares, they will not share our risk. Real estate, we don't know. Bank FT, we don't know. But insurance is correct answers. Okay. The sole breadwinner family might intimately see. Very, very important questions. The house may lose value due to natural wear and tear. A person. See, which among the following scenarios warrants insurance? The insurance scheme, how they are get from the story they are telling. See, very nice. See, modern concept of insurance. Very, very important. In India, principle of the life insurance was reflected in the institution of the joint family system in India, which was one of the best forms of the life insurance down the ages. The sorrows, losses were shared by various family members in even unfortunate events of the member. In family, one member was lost. A very important person lost means how they family that family will run the family by that family. See, unfortunately, demise the member means what they will do. As a result, which each member the family continue to be secure. Suddenly, the one member will come and recover the family. That is the personalized person. See, breakup of the joint family system, emergence of the nuclear family in modern era. You see, current concept. In modern era, the joint family system, the emergence of nuclear family, coupled with the stress daily life as married. Two people only now they are managing their family necessary evolved with alternate system security. The highlights of the importance of the life insurance is very important. The nuclear family, then joint family. The nuclear family very stressed to manage the emergency time. They are telling very true. But joint family, the first form insurance down Jesus, the sorrows and losses were shared by the various family members. Very important point. Yes. This was the answer. Yes, correct. You can go with what is the meaning of insurance? Insurance the risk of the transfer of the risk pooling. Large insurance, commercial insurance, and practice by the today trades with the law. It could be this. Is the reasonable. Okay, the next chapter responsibility assurance sympathy. The first insurance company was founded by the 1878 mobile. The first legislation enacted regulated the conduct insurance company in India 1938. When the life insurance business was nationalized 1956. What is the meaning of IRDA? Indian Insurance Regulatory of Development Authority of India. What is the committee explored the government changes of the development of the industry. The Malhotra Committee, which year they changed to IRDA to IRDA 2014. How much they do not exceed the total capital review for the universities. Which of the following regulated insurance India? Insurance Regulatory Development Authority of India. Okay, today we close the chapter. It's closed, I think. Tomorrow we will see the customer service. Very important point, customer service.